So once again, good evening, and thank you so much for your patience. I see a lot of people have already joined, a lot of people are already joining. So we'll just start with our session. And as I said, please use your chat options to ask any questions. My name is Yogesh, and I'm a global market strategist with Century Financial. And the purpose of conducting this webinar today on earnings analysis is basically to update you about how earnings season actually works and what is the most important thing you must see when the US stocks and most of these companies they come up with their quarterly results. And one of the most significant things today we are going to see a strategy which is called price action analysis, and we'll see this strategy that how this can be helpful to decide whether how much risk we have to take or how much risk we can actually take before entering into a stock when it is about to come up with the earnings. I most of the time conduct these sessions, and these sessions are basically they have different topics, and we do this every week on different topics. And the agenda is basically to aware the investors about what's going on. And sometimes it's about interest rates, sometimes it's about earnings, sometimes it's about trading strategies. And the idea is to ensure that you understand well. If you have any doubts, of course you can use your chat options to ask questions here. A copy of this session will be put on YouTube channel of Century Financial, so you can subscribe and check the video as well later on. Plus, if you want to have one-on-one session, this is something which we do for all our attendees. Since you have attended this webinar, if you have any doubts, one-on-one, we can have a session on Zoom, or you can come to our office in Emar Square, and we can definitely sit and understand more. So before we begin, just try to use your chat options. If you can hear me clearly, if you can see my presentation, just use your chat options to say yes or okay, and then I can proceed, just to ensure that everybody understands or everybody can hear me. I'm audible enough, and everybody can hear properly. There is no network congestion. You can use your chat options to write yes or okay, and then I can definitely go ahead and proceed. Perfect. So I think a lot of people have said yes. A lot of people have said yes. Okay. Okay, great. So I'm assuming most of you also can hear. And now coming back to the point, the earning season. So let's understand and to introduce what earning season actually is. And that is the most important thing, because a lot of times this has been existed for the longest time now. This is not something which is very new, but I'm sure a lot of investors who are basically too much busy in work and probably have no time to see that how earnings actually work. So I'll just give you a very basic introduction. And this is important because earnings season, as we call it, earnings season is nothing else. It's basically the month when a lot of these companies which are listed in stock markets, they come up with their quarterly results, their financial results. So they're also called corporate earnings, and that's how the name earnings season comes in. Please let me ensure this. Whatever strategies we are going to discuss over here, none of them give you any assured or guarantees of any returns. This is completely based on historical data, information purposes, and future outlooks, right? So before taking any trades, before investing anywhere, we would strongly suggest that talk to your risk managers, talk to your investment consultants, talk to us before you do that. And this is only for information purposes. The word earning season mostly signifies the time when the companies come up with their corporate earnings, and that's why we call it earning season. And as I said, this is a very crucial time for investors and traders also, because it provides a lot of valuable insights into a company's financial performance. And it is during this time that there are a lot of companies, as I said, on quarterly basis, they are sharing the results. How much revenue they made, how much profits they made, how much debts they have, what is the future outlook is going to be like, what is their earning per share, one of the most important financial metric which people have to understand and which investors and traders really look out for, because earning per share decides kind of where the stock is going to be, whether the stock is going to go up that particular day or going to come down. It's one of the very key deciding factor. So the point is, when we talk about importance of the earning season, we should definitely understand this. Uh, when we analyze these reports, or the quarterly results which come out, it is done to understand companies' ability, that whether they will be able to generate revenue, whether they are able to manage the cost or not. Basically, are they able to generate profits or not? And this information is really important, because as an investor, if you're a long term investor and if you have to invest in a company, you need to understand whether this company is making money or not. So if we are looking for long term investment opportunities, earnings is important, because for that particular quarter, for the next 3 months, if you're going to invest, the results are going to be showing you a glimpse, and a detailed glimpse, I would rather say, not a glimpse, a detailed understanding of what the financials of the company looks like, right? So that is the importance. Moving on, the market expectations. So when we see during the earnings season, the market expectations play a very important role. Guys, whatever we are going to discuss it over here, normally I do a lot of sessions, and most of the time it's just my duty. I would tell everybody to keep your notepads and a pen. Of course, if you feel something is really important, you can write. A lot of stuff I'm telling you is it's actually very basic. You can find it anywhere. But if you feel that something I've told is of value, you can always note it down on a piece of paper or notepad. And as I said, if you want to discuss it further, you can always reach us out in our office, and we are definitely there to sit with you and make these things much more easier to understand. Coming back, so market expectations are really important, and during the earnings season, the market expectations, they play a very crucial role in determining the stock prices, because the analysts who are predicting or forecasting that what the earning is going to be like, so they are closely watching the quarterly results of all these companies, and the investors, they are also closely following that how much earnings the company has made, and what was the forecast, what were the predictions 3 months ago, and whether the company has fulfilled those expectations, whether they have generated enough earnings per share, whether they have generated enough revenue. Because if the company's actual earning per share, if it surpasses the expectations, then it is viewed a very generally it is viewed positively by the market, and it pushes the stock price higher. But if analysts predicted a earning per share or revenue, and the company is not able to generate, not able to fulfill those expectations for that quarter, the stock price may decline. And that is the important part. So now what happens? The dates are already decided, that when these results are going to come. All right, as we speak, there have been companies today which have declared their earnings, so we'll see what was their results like and what was their impact on the stock. So we'll go to a live investments platform, and we will see that the impact of the earnings, how much it has impacted, and where the stock has gone after the earnings came out. And we'll see some very good names, and we'll see also which are other companies which are going to come up with the earnings. Please remember this session is really important, because this is the month when earnings are going on, and a lot of investors and traders, they are looking at this month. After this, next 3 months again the earning season will come. Post that, next 3 months earning season will come, and every time earning season comes, it generates a lot of fluctuations in the stock market, lot of volatility in the stock market, right? So market expectation is really important. What the analyst has expected, If the earnings come up to the expectations, the stock price goes up. If it doesn't come up to the expectations, the stock prices may go down. Right. Third thing is the factors which affect the earnings report, and there are a lot of factors which can actually influence a company's earnings report. It really can impact the stock price, because there are a lot of, so for example, imagine a company which is basically operating in a very cyclical industry. Sometimes, let's say a company which makes umbrella, right? So this company will face a lot of fluctuations in their earnings if there is a problem with the seasonal factors. If umbrellas are not needed, say in winters, so during winters the sale of umbrellas will come down and the earnings will get impacted, right? So similarly, if there is a company which is facing a very intense competition, it might struggle to maintain that profitability. Let's say I'll take example of Uber and in Dubai, it could be Uber and Kareem. But the point is, Kareem is not a listed company, so the comparison will not be fair. But in US, it would be Uber and Lyft. Both are ride-sharing apps. Both of them have stocks, and both of them are competitors and strong competitors. So it is possible that Uber and Lyft may compete, and one of them might be better. So their earnings might be better, and the other one might not be able to surpass the earning estimates because their competition did really well than them. So that really gives a lot of perspective that which are the factors that can affect a company's earnings. And this is just one of the factors I'm talking about. There can be multiple factors which can actually influence the earning results of the company, right? To give you one more example, since, and please, as I said, your chat options are active. Please use them to write. If you have any questions live, please ask me related to investments, and I'll be trying to give you the answer. If I'm not able to give you the answer today, one of the people from my team will definitely reach you out and will give you the answer. So if you have any questions, please go ahead and ask, and use your chat options to do that. So that being said, there are a lot of factors, like in pandemic, for example, because there was lockdown, a lot of companies, their earnings actually declined. But there were some of the companies whose earnings actually went better. Netflix, Amazon, Zoom, because people started using these products more in the pandemic as a work from home tool or a remote lifestyle. That's where we understood that the earnings can be impacted and can be affected depending upon the seasons, depending upon global events. And that is why I would strongly suggest that always read the earnings report and look at the past earnings history also. That's what we are going to discuss in the price action analysis strategy before we end this session. So, for going further, if you see the fourth point, the analyzing of the earnings report. Now, as I said, if you have to make most of the earnings season, so a lot of investors, they try to filter out the stock. Which stock should I look for the earnings, and which stock should I basically trade, right? So you have to pick a stock which has shown most of the time growth in revenue, which have shown growth in the earning per share, which have shown growth in profit margins. And that's your investment objective, right? Less speculation, more fundamental. Look out for those companies, and you can screen these stocks by looking out that which company has shown maximum EPS growth, let's say in last 1 year and last 4 quarters. Which company has shown higher revenue growth in last 3 quarters or 4 quarters. So as an investor, you can quickly narrow down, because there are so many companies which are going to come up with the earnings. So which one you have to focus on, that is really important, right? And again, as I said, the last point, which shows the company comparing the options. So when you're using this screener and looking at it, that screening the companies by EPS growth and profit margins and revenue growth, you will have so many options to consider, right? Because within the same industry, you have to identify the top performers, because there are a lot of industries. Even if you talk about technology as a main industry, Their sub industries can be so much. Within technology there is digital payment, there is uh, DNA sequencing, biotechnology, there could be artificial intelligence, robotics, 3D printing, drone manufacturing companies. Imagine telecom companies, for example. So, technology as an industry is so big, but then there are so many sub industries, and in every industry, there are so many companies. So, how do you know that which company you must pick and look at their earnings and trade in? So, that's why first you pick your industry, then your sub industry, and then filter out the companies which have performed well, and then compare their earning per share and compare with which are equal sized companies. And again, as I said, I'll cut this down to something much more simpler. Obviously, a lot of investors, they would not have the time to screen these stocks or look into the balance sheets, and that's what the price action analysis strategy could fit in, and that's what we are going to discuss. So, to give you the idea, I think we have understood what the earning season is. This is a time when a lot of companies in US, they are going to declare their corporate earnings for that particular quarter, and this happens every 3 months. So it's going to be January, it's going to be April, and then it's going to be July, and then October, and then again January. So this particular month you must have seen a lot of volatility in the stocks, and I will take you to the live platform and show you that how these stocks have moved after their earnings season, right? Next is, as I said, making the most of the earnings season. How do we make the most of the earnings season? Sometimes a lot of investors would speculate, right? Just because probably a company is really good uh, or hyped, for example, people would buy and hold on to it. But that is called a lot of, that is a lot of speculation. If you haven't done your research, sometimes we fall into peer pressure. If one person has invested in that company, and because you haven't done your research, you would just follow what the other people said. And I think sometimes it works, but most of the time it is always better that you do your own research. And please tell me, I think somebody asked that don't we have to be certified to do that? And I must tell you that checking the results or checking the earnings of a company, it doesn't require you to have a professional certification. You're not managing funds on anyone's behalf. This is just your own investment. So I feel that everybody should have enough understanding, and you will have enough understanding. You don't need to be a CFA to find out that what is the earnings of a company. I'll exactly tell you that which are the things you must see. So you do your research. And research, when I say, most of the time when we talk about research, research doesn't mean that just look into the balance sheets. Of course, before you invest into any stock, uh, you have to always analyze that what the company is in. Look for any past trends or pattern. See, one way is to look at the company's financial statements. And obviously, I'm assuming that a lot of you are not accountants or certified accountants. So your first question would be, how do we see the financial statements? Within financial statements, as I said, you all you have to see is basically the earning per share and the revenue, and that is something which you can see apart from the financial statements also. It's something which is easily available. And of course, the most important idea is we must Guys, we are facing some technical issue. I just want to make sure that everybody can hear me. So, if you can if you can write yes or okay using your chat options, I think that would be easier for me to continue. Otherwise, I might have to just reload this. If you can hear me properly, please write yes or okay, and I would continue my session because I just want to make sure that everybody can hear me right. Good evening, everyone. Welcome to the webinar. First of all, I would like to apologize. From my end, I switched on to the session at 7 p.m. And I think for last 15-20 minutes, I have been using these slides and going on. But I think there was some technical error because the webinar looked on from here. But I think the attendees were not able to hear it. And that is why we have been trying to fix the problem. And finally, it's here. So I think without any further delay, I'll just start the session. And once again, we are always on time at 7, and this is something which has probably happened for the first time. So I really apologize for the delay. We'll make sure that the session is done exactly in the way as was expected, and we'll cover every important detail. As I said, it's a fault from our end. So thank you so much for being there and just staying there for some time. And if just in case if there is any network congestion, or again if there is any fault, please write it on your chat options, and we'll try to make it as smooth as we can. So today we are going to talk about earnings, and earnings is exactly at this moment the most important topic, because currently we are there when the results of the important companies are coming out, the quarterly financial results, as we say. So the name earnings season, or earnings as we call it, it comes from the practice which a lot of these companies do, which are listed in stock markets. A lot of US companies in stock markets, they come up with quarterly financial results, how they have performed in last 3 months, and they come up with these results every quarter. So we are talking about months like January, and then April, and then July, and then October, and then again January. You will see maximum volatility in the stocks. You will see maximum volatility in these companies. And during this time, so we'll also go through a live platform and see that the companies which have shown earnings in last 1 or 2 days, how they have performed, where they are at the moment, and how the stock prices can go really volatile. So to introduce to a lot of people, because I'm sure this is something which is very common, but that being said, I'm sure there are a lot of investors who may not get time to look into this deeply. So just to explain it to them how the earnings season actually work, very crucial time for a lot of investors, because stocks during this time move a lot. So whatever strategies also, guys, we are going to discuss to trade in the earnings season. As I said, this webinar is going to be a lot for information purposes. If you want to take any trades, and if you want to take any investment decisions, I would always request you to talk to your risk experts. Any strategy I'm going to discuss, please run it by the investment consultants, and only then trade into those. So the earning season at this point of time, again, it's one of a very crucial time for investors. This is the time when a lot of US companies, they come up with their quarterly financial results, where they show that how much revenue they have generated, how much profit they have generated, what is their earning per share, what is the future outlook looking like. And that's a very important news, because on those basis the stock moves up and down. Great the earnings, good results, higher or better are the results, the stock price mostly moves higher after that. If the results are not good, we might see the stock prices coming down. So that is actually a significance of the earnings season, and this is really important to make informed investment decisions also, right? Second most important thing is the market expectations, because when we talk about market expectations, it's one of those things. Market expectations means that there are analysts which have prepared their estimates, that how much revenue it is going to be, how much earning per share this company should generate at the end of this quarter. And if those results, if they match with the market expectations, if the analyst has expected that the earning per share of Coca-Cola is going to be 80 cents, and if it is 80 cents or more, the stock price of Coca-Cola might go higher, because the earnings have beat the Wall Street expectations, right? So if a company's actual earnings surpass the analyst expectations, the stock price normally goes up, because it is generally viewed very positive by the market, and it leads to an increase in the stock price. If the company fails to meet the expectations, then stock price may come down, and that is why the market expectations are really important. And it is always mentioned that what the market expectation is going to be like before the earnings come out. So you can see that what is the expectation, and when the actual results come out, if they are better than what is expected, the stock most of the time possibly goes up. If the results are not better than the expectations, the stock mostly comes down, and these percentages can be really high. This can, so if a stock falls down, can falls down by 5 to 10% also in a day, if the earnings are very bad. But if the earnings are very good, the same stock can go up by 5, 10, 15, 20% higher also. And that's why this is the time which is very crucial for investors and traders as well. Now, the another part is which are the factors that are affecting the earnings report, and there are a lot of factors. In fact, something as normal as I say, a company which is let's say making umbrellas would have more earnings during the time of a rainy season, but when it's winters, they might not need enough umbrellas, and that is when the earnings are going to be less. That's when the revenue might decrease. So there are a lot of factors that influence the earnings of a company. Basically, when a company can make higher profit or lower profit, sometimes a competitor does better than you, and that's where they make more revenue than your company. So this is something which happens a lot. Let's say if I were to compare Uber and Lyft. Lyft is also a ride-sharing app in US, and so is Uber. Both of them are listed companies in the stock market. Both of them are US. Both of them have the same target audience, right? But one performs better than another. Maybe Uber was doing really well, but Lyft comes in with better prices, approaches more customers, and now the earnings of Uber might come down. So this is the reason that what can also, and like this, there are so many reasons. In pandemic, the earnings of aviation industry, hospitality, all of these companies were going down, but the earnings of companies like Amazon, Netflix, Zoom, these kind of companies, their earnings went up because a lot of people were using their products. So the idea behind uh, earnings is, first you have to look at what markets are expecting. Once you understand the market expectations, you see the actual results. If the actual results are better than the market expectations, the price of the stock mostly goes up. If the actual results are not better than the market expectations, the stock price may fall. And that's where you have to understand that if you have bought that stock, you could be exposing yourself to that risk. So how you protect yourself? We are also going to discuss about uh, a strategy called price action analysis, which you use during the earnings season. I'll tell you how you use it because it gives you a lot of historical data and understanding about a stock and the previous earnings, right? And next is analyzing the earnings report. How do you analyze the earnings report? Of course, you can always go through their financial statements. And yes, I must tell you that you don't really have to be a certified accountant to read those financial reports, because basically in financial statements you're looking for two or three really important things, and one of them is the EPS growth, earning per share growth. Earning per share is basically the total net income divided by the number of shareholders a company has. So just to see that how every single penny you have invested in the company, how efficiently it has been used. That is what the earning per share tells. And that's why it's one of the most, please write it down if you have a notepads with you. It is one of the most important factor in this, that the earning per share is going, it is something which you must see in during the earnings report of the company, followed by second important thing, which is revenue. Must look at the revenue, and then lastly must see the future outlook. So a lot of investors and traders, they would sit and try to analyze the earnings from last 5-10 quarters, just to see that is there a trend, is there a pattern that has emerged in this particular company. Is there a trend where we have seen that most of the time the earnings by this company, it beats the Wall Street expectations, and the earning per share has been growing throughout. So we have also prepared a proper price action analysis strategy, which I want to show you. I also want to show you the impact of the earnings on the stock, and that is what something which we are going to do. Lastly, while we are introducing the earnings season to you, the important part, comparing options. What sort of industries are available? And in these industries, there are so many companies. So, which are the companies you must pick? First of all, without a doubt, the companies which you must pick must be showing a consistent growth in their revenue and earning per share. I think it's an absolutely no brainer. A company you want to invest in must be profitable. How do you know it is profitable? You see their past 1 year or 2 years data to see that whether there has been a quarter on quarter earnings growth, and that is what will make you pick that stock. Otherwise, there are so many industries. There is technology, there is food and beverage, there is healthcare, there is biotechnology, there is pharmaceuticals, there is financial services. And within these industries, there are so many sub industries. When I talk about technology, within technology comes artificial intelligence, within technology comes robotics, within technology comes 3D printing or drone manufacturing. So all of these things, they come under this. And within these sub industries, there are so many companies which are competing against each other. So how you pick that one company? So first, you pick out all those companies in the sector which have shown growth in their earning per share, which have shown growth in their revenue. And then you put all those companies together. And those are the companies which you will be looking at in the earnings season, whether they are going to beat their estimates or not. Right? So pick out the quality companies first, put it together, and then wait for their financial results to come in. Right? Next, making the most of the earning season. So again, as I said, how do you make the most of the earning season? This is really, really important. First and foremost, you have to do your research. Without doing research, and when I say research, it's up to you. You can go as detailed as you can. And sometimes, if you don't have time, that is where the investment consultants are really into use, because a lot of these guys that are in research, they sit, they look at their news every day, and you can do it too. I always feel that every investor should be independent and should understand how stock markets actually work. And trust me, this is not something very difficult at the moment. I wouldn't think that I need a certification to do that. If it's my own investment, all I need to is just be aware, read about the companies, at least those companies which I'm using the products. Imagine uh, if you have an iPhone or a MacBook or an iPad, that's Apple. If you use Microsoft Excel, that's Microsoft. If you make a presentation on PowerPoint, that's Microsoft. If you're using a Dell laptop, if you're driving a Toyota, Volkswagen, Ford, Nissan, if BMW or Mercedes or Rolls Royce, if you're wearing Adidas or Nike or Skechers, if you have a debit card or credit card which says MasterCard, Visa, if you're eating at McDonald's or KFC, right? If you have taken a Pfizer vaccine, if you travel through a Boeing plane, if you drink Coca Cola or Pepsi, right? All of these products you're already using, you're already putting money into these products. How many of you have actually purchased shares of these companies whom you're already using the products? Even the daily grocery you buy, which comes from Carrefour, it's a French company, it has their own stock. So the idea is that you always do your research and you start with the companies which you're using. What's the news today in Boeing, or what's the news today for MasterCard? What is the news today for Visa? And just read the news about today. When it comes tomorrow, they read the news that particular time. But always be informed. Just read 2 or 3 important news for that company, and it's enough. Do your research. Look at also that if there have been any previous trends or patterns during the time when the stock price goes up or down, right? Obviously you must see that how the company is performing as compared to their competitors, between McDonald's and Burger King, between Uber and Lyft, between Coca-Cola and Pepsi, between Disney and Warner Brothers. Like, the idea is very simple, that one company can do better than other, probably the competition is doing well. So this is where the research part comes in. Should I buy Uber? Should I buy Lyft? Should I buy any other company? So research is something which is really, really important, guys. And again, as I said, look for those companies which are giving you consistent earnings growth. And you can easily find that out. Look for those companies whose earning per share has grown quarter on quarter, right? Because if a company has a good track record of beating the earning expectations, so these companies mostly should have a positive outlook for future. And that's why you should also diversify your portfolio. uh, Prepare a successful investment strategy. And during this earnings time, the corporate earnings when they are declared, it is really important to diversify your portfolio because you must reduce your risk. And within a mix of these stocks from different industries, from this different sectors, it will really help you out where you can actually minimize the impact of any company which has come up with not a good earnings, right? Because let's say, for example, you bought Apple, Coca-Cola, Bank of America, Pfizer, Mastercard, Adidas, Volkswagen, Barrick Gold, any of these companies which are into different industries. Now, once you have diversified, that way you can see that if one stock came up with bad earnings, maybe that particular sector had a rough quarter, right? If you make a mistake in picking the right company, at least if you're diversified into other industries, the chances of the risk or the chances of the loss is actually minimized. And that's all we are looking for when we are diversifying. We are looking for better risk management, right? Be prepared for volatility. During this time, we have seen the stocks are most volatile. We see that there are a lot of stock price fluctuations. During this time, we have seen that the prices move a lot. If the earnings come really good, the stock price can go crazy high, crazy. If the stock price, if the earning expectations are not, if the actual earnings do not surpass the expectations, the stock price can come down also, right? So always be prepared for volatility. And one very important thing I would like to tell here, especially for day traders and even for investors who are highly leveraged, please, because of higher volatility, please make sure that you're putting a stop loss, so at least your losses are limited, because the stock price can go really crazy, and that's why you need to put stop losses. Keep your, if you're having a leveraged trading account, please keep your accounts well funded, because markets can open and close at a gap also, and earnings normally come out after the stock market is closed or before the stock market is open. The results are never disclosed during the market hours, right? So always keep a proper risk management strategy, diversify your portfolio, keep your stop losses as well. And sometimes for those people, you can all there are a lot of investors who also trade options. Options is a different set of strategies. Of course, we are more than happy to sit with you one on one and tell you that how you can protect your portfolio. For those investors who have already bought stocks, what you can do is, those investors who have already bought stocks can also buy put options, that in case if after the earnings the stock price falls, you have your put option to protect it. What is a put option and how it works, we can definitely sit one on one and discuss it further, or attend a different session where we will talk mostly about options as well. So it's also one of the strategies. And last in this section, very important, guys, please avoid trading on rumors. I know market is all about rumors, and people say that you trade, basically trade, enter into the rumors and come out at the event. But what you have to understand is, there will always be rumors, there will always be speculation about the company's financial reports. But it's really important to avoid trading on these rumors, because it may not be accurate. Wait for the financial results to come, right, before you make any investment decisions. Also, we will discuss with you a price action analysis, in case if you don't want to wait before the financial results are coming. There is at least something which you can look, and that is going to be a historical pricing report of how the earnings have come back in the past, and that is again for your information purposes only, so you can make better investment decisions. Because investing in the stock markets, and especially during the earnings time, it requires a well planned strategy. You do your research, diversify your portfolio, be ready for fluctuations, keep your stop losses. Sometimes if you have already bought the stock, you can consider buying put options as well for that. So this is something which can really help you to take those decisions and enter into this earning season with more and more confidence, right? I think that is something which everybody would love to do that. Now comes, as I said, how to interpret the earning season. You look at the earning per share, you look at the revenue, you look at the future outlook. So these three, from the entire earnings report, you don't have to see every single thing in the financial statements. Something very important which you must see is the earning per share. So how it works is that a stock earning comes every quarter, and those earnings are disclosed before the market opens or after the market close, and it is already informed to the investors at what time the earnings will come out. Now, when the earnings come out, there's a whole transcript. But what you have to see is that the earning per share, which was expected by the analyst, did the actual earning per share exceeded those analysts' expectations or not? If they did, most likely the stock must go higher. If they did not, most likely the stock might go down. This is one factor which you must see. Second is the revenue. Revenue also, you must see that the revenue is better than what is the analyst expected or lower. And last, most important is the future outlook. A lot of companies in their earnings transcript, they also talk about what is their expectation in the future, how they see the company in the next 3 months, what is going to be the expectation in the next 3 months. I'll give you an example. Let's say Apple stock came up with great earnings per share, okay, generated a very good revenue, okay, but because of the lack of supply of semiconductors, they said that because of lack of supply of semiconductors, we may not be able to manufacture enough iPhones this quarter, and that might impact our sales also. So they already said and made the market aware that the next quarter the expectations needs to be lower. Hearing that news, a lot of investors, they started selling the stock in spite of stellar earning per share, in spite of very good revenue beating the expectations. Because their future outlook was gloomy for the next 3 months, the price of Apple stock fell down by almost 10%. So this is something which we need to understand, and this is something which we need to see. Because guys, so now since we are talking about it, let me show you what was the impact of the earnings on the Netflix share yesterday. I think yesterday or day before, the Netflix, the stock declared their earnings, and I will show you how to read the earning per share. So what I'm doing right now, just opening a separate page, I'm just going on Google right now. Okay, I write, or let me just share this page right here. Bear with me for 1 second. Yeah. So as you can see, I've just opened my Google page right here. So what I'm doing is I'm writing Netflix stock earnings, right? I enter. Now here, as I can see right here, I put news. I click on this news, and as you can see, first thing, whichever link you see here. Now, this is the news which I'm reading right now. Fourth quarter, subscriber additions surged. So, what I can see, first thing, that the Netflix subscribers in the fourth quarter has increased in last 3 months. So, their forecast was, so subscriber addition 13 million, and Netflix own forecast was 9 million, right? With a full year 2023 net additions sitting roughly 30 million subscribers. So the company has added 7.5 million paying users in Q4. So the revenue has beat the analyst estimates of, so analyst estimate was $8.7 billion. It has made $8.8 billion in the quarter, which is an increase of 12.5%, right? So this is something which is really important, guys. The first quarter revenue $9.24 billion on with expectations with 9.28. Earning per share, if you see right here, slightly missed the estimates in the quarter. So the reporting earning per share was 2.1, the below expectation, because expectation was 2.2. The company reported an EPS of 12 cents in the year ago period. So as you can see, 1 year ago their earning was very less, but 1 year after the earning has come better, but still less than the expectations, right? Netflix guided to first quarter earning per share of $4.50, which was ahead of their Wall Street estimates. Now, other matrices are also important. If you see, average revenue per member is up by 1%. But obviously, this is extra information. You can choose to read it. It's always better to have more information. But you got most important. In case of Netflix, you got the most important news: revenue, earning per share, and the average subscribers, which have increased, which are their main source of revenue, right? So this is really important, guys, when you are looking at. And now let's also understand that what was the impact of the positive earnings and positive revenue. What was the impact of the positive revenue and the increased subscriber service on Netflix, right? Let's see that how it impacted. So I'm going to switch to the live investments account, where you can actually see that what was the impact right here. And yeah, so this is the live chart for Netflix, guys, right here. Okay, uh, look at this. So the Netflix earnings came out previous night, and the Netflix, I let me zoom this so everybody can see this. Just zooming this one so you can see this. Look at this. So Netflix closed at $490 per share on 23rd March, before the earnings came out, right? So it closed at $490 per share. But when the after the earnings came out in the same night during its close, next day markets opened, closing at 490, opened at $537, and today it is 552. So as you can see that it has easily moved 10% from yesterday night. So since day before yesterday night till today, it has already moved 10%. 10% movement in a stock in just one night. It's not normal, but not also abnormal during the earnings season. That is why I want to focus on this month. This is the month when earnings season is there, and that's where a lot of these companies are coming up with the earnings season. Netflix already did. There will be other companies which will be doing today. Now the important part is, how do we understand, or how do we trade during the earnings season? One of them is price action analysis. The strategy which you must see is called price action analysis, right? How do we look at the price action analysis? Now I'm going to share the strategy with you. And as I said, this is just for your information purposes only. If you want to understand more about this strategy, please reach out to us one on one, and we'll definitely explain it to you. You are the part of this webinar, so we'll definitely sit one on one with you if you ask for it. There are no charges, there is no cost attached to it. The training sessions, and these are learning sessions, so we are definitely going to sit with you one on one, and we can explain you that how these strategies work. So I'm going to share something really important with you, and you can check this out. This is called price action analysis, right? Now this was made for the stocks which are going to come up with their earnings from 22nd to 26th. So I think any like important companies or bigger companies which are going to come up with their earnings 22nd, 23rd, 24th, 25th, and then 26th. So these 4 days we are going to analyze. And as you can see right here, I'm just going to zoom this. So just to show you that what does price action analysis show, these are the stock names. Okay, these are the companies which are going to come up with the earnings on the first column. Everybody, if you want, you can write it on a notepad. If you can see this clearly, can you please write yes or okay? So I would know that you can see the strategy clearly. This is the last bit of the session. After the strategy, I'll take every if you have any questions. But if you can see my strategy properly, if you can see everything, you can see the PDF. Please write a yes or okay. I just want to make sure that everybody can see this. Perfect, perfect, great, great, great. So the first column which you see contains the list of the companies which are going to disclose their financial results. Okay, and this is between 22nd to 26th. So this was already made, and today we are on 25th. Next is the next column which you see is the last price. So basically, when the strategy was made, what was the price that time? As you can see, for Netflix also we prepared so that the last price was 485 when this was prepared, right? Then comes the second column. This is the second column, which was the last price when the strategy was being made. Third column is the Bloomberg target price. So what the Bloomberg analysts have targeted for this particular stock. So for all these companies, Johnson and Johnson, AGNC, United Airlines, PNG, what is the Bloomberg target? This is also mentioned. And then the earnings date, as you can see, 22nd, 22nd, 23rd, 23rd, 23rd. And as you can see, in case of Netflix right here, where is it? Netflix also was around 23rd. Yeah. If you see Netflix right here, it was 24th after market around 1 a.m. Right? So this is where the Netflix earnings also came out. So this is the time, and then UAE time is already mentioned, the date and the time. So first five columns which you see contains the name of the stock, the last price, the target price of which is given by Bloomberg analyst, earnings date, that when the at what date the earnings are going to come, and the time, whether it will be before the market opens or after the market closes. It's already mentioned here. Next comes the sixth column, which says the probability of an earnings beat. Now, this strategy is based on last 10 years of performance. Okay. In last 10 years, this particular quarter, if this is the fourth quarter results, so last 10 years in fourth quarter, how this stock has performed after the earnings is what this flyer tells you. So when you're looking at the sixth column, the probability of earnings beat, this is taking last 10 years of data for the fourth quarter, that in the fourth quarter, for example, if I'm looking at United Airlines, it says that it has a probability of beating the earnings 51.2%. That means that in last 10 years during the fourth quarter, we have checked all the earnings which have been declared in last 10 years in the fourth quarter, and it has 51% probability of beating that earnings estimate, right? So now, earlier, while you were speculating on this stock, now you have some information about it. You know that there is a 50% chance, a probability of beating the earnings, and it's not 51% for all of the stocks. As you can see, for Procter and Gamble it was 36%, for General Electric it is 26%. In fact, for Netflix it was 41% chance that the probability that would beat the earnings, and it actually beat the earnings. So sometimes the lesser chance, as I said, even the 34% does not mean that it is not going to beat the earnings. It's a game of chance, of course. But that being said, it's the probability. So as I said, that please read this strategy for information purposes. How to execute it, please talk to the consultants before you do that. Look at the stock below Baker Hughes, this one, Abbott Laboratories, which says that there is a 75% chance or probability that it will beat the earnings. So the sixth column tells you the probability of the earnings beat. Comes the seventh column, very important, and it says the 1 day implied move. 1 day implied move means that after an event like earnings, in 1 day how much a stock historically has moved. So this says 5.5%. So for United Airlines, it's 5.5%. And for other companies, AGNC Investment, as you can see, 2.4%, Johnson Johnson 1.8%. And as you can see for Netflix, right here, it was 7.3%. Netflix did move around 8 to 10%. So we are just taking one stock from this. But of course, there have been other companies also which have declared their earnings, and you can always take this flyer and see that as per the earnings beat and as per the movement, whether the stocks have performed that way or not. So it just gives you an idea, right? Then comes another column, the reporting quarter, that which quarter they are reporting. As you can see, and most of them are reporting Q4 right here. Some of them are reporting second quarter also, depends on the earnings reporting date as well. And then comes the most important last three sections, the average absolute move after the announcement of the earnings. So after the earnings were announced, what was the average percentage increase or decrease in the stocks? As you can see, the absolute average move after the announcement was 4.3% in case of United Airlines, right? And if I see Netflix, right here, the average absolute move is around 9.4%, moved around 10%. Historical gain, which means the maximum gain which the stock has seen after the earnings in last 10 years in the same quarter, this is mentioned right here. Historical loss, so maximum gain, maximum loss, both is mentioned, but this is on the day of earnings. All right. Then comes T+7. If you buy the stock, hold it for 1 week, what would have been the average move after that, after the earnings? What is the maximum gain you could make as compared to the historical understanding if you buy the stock before the earnings and hold on to it for 1 week? Maximum gain 15%, maximum loss 12%. So every stock over here, it shows the maximum gain and maximum loss if you buy the stock and hold on to it for a week after the earnings. And then, sorry, before the earnings. And then comes T+30. If you buy the stock before the earnings, hold on to it for 1 month. So average movement after the earnings 14.3%, maximum gain 30%, maximum loss 8%. And for all the companies, it is different, right? So this is something. Now, when you know that if I buy the stock and hold on to it for a week or for a month or for that particular day, in last 10 years on an average, how much it has moved, what has been the maximum gain, what has been the maximum loss, kind of helps you to screen that stock well, right? So that is something which is really, really important, guys. A copy of this price action analysis strategy can be sent to you through WhatsApp or through emails. You just have to reach out to your relationship manager, and they will definitely give you a copy of this price action analysis. In fact, tomorrow is going to be 26th. This report was made from 22nd to 26th, so you can even see that which of these stocks came up with positive earnings and how much they moved. After 26th, we'll make another price action analysis flyer. So as we speak, the earnings are in already in progress. Today's earnings, if you see, and how to see. So if, using this flyer itself, if you see, I'll just scroll it down. Today is 25th. So you look at the date right here. 24th, 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 and this is 25th. So before market, Comcast has already showed their earnings. Blackstone before market. So Comcast, Blackstone, NextEra Energy, Marsh and McLean, Northrop Grumman, Valero Energy Corp, Dow Inc., American Airlines, Alaska Air, they have already shown before market, followed by Humana, Union Pacific. Visa and Intel are going to show their earnings after the market. All right. Western Digital Corp, Western Alliance Bank Corp, again after the market, followed by T-Mobile and Capital One Financial Corp. Tomorrow, before market, it will be American Express, Colgate Palmolive, and First Citizen. So you can look for their earnings. As of today, if I were to pick a stock, let's take, for example, the first one, Comcast Corp, right? Now, Comcast Corp, if I see, for example, let's see together whether the stock has shown positive earnings or not, or what has been the probability. Let's open the tab together so we can just go and check. This will really help you to understand that how we are able to. So let's say I put Comcast Corp stock, right? So it came before the earnings, right? Now look at this. Comcast sees Q4 profit rise 8%. This was 3 hours ago. Earnings right here. See, December 2023 EPS earnings beat by 6.35%, revenue beat 2.65%. Here, if we see, this was just 3 hours ago. If gives, yeah, see this Comcast. So fourth quarter profit surged by 7.8% as they increased the number of businesses using its communication services. Right here, positive results. So the company eked out positive results despite losing 389,000 video subscribers. This is important. 6.9% decline in US advertising, right? Theme parks saw a 12.2% increase in revenue, 31 million subscribers at the end of the fourth quarter. So as you can see, their revenue, look at this, revenue from the company's theatrical operations rose 59%. And as you can see, the reason, and that is the whole reason, you can see that the stock itself today is up by 4%. Guys, 4% increase in a stock, it's not something which happens every day. But yes, during the earnings, as I said, it's also not a very abnormal thing. So as I said, continue to look at the price action analysis. I would take any questions. Now, if you have any questions, guys, please ask. And once again, I would like to apologize for starting the session 20 minutes late. This is definitely was a technical issue. I realized that this was something which that I was already talking, but then we realized that the attendees have not been able to hear me properly, so, and we were able to resolve this issue thanks to the IT team. And uh, I think there are a few questions right here. What are the chances of the price action analysis being absolutely right? No, I mean, I never said that it's going to be 100% right. See, price action analysis report gives you an understanding of last 10 years about a company, that what is the probability, as looked in the last 10 years, what is the probability that this quarter the earnings beat will happen. And it also, by the way, the most important thing it tells you is the percentage volatility, how much a stock can move after the earnings. And that's really important because your risk appetite is really important. You need to know that whether you want to uh, buy a stock before the earnings, if you are doing that, how much it is capable of moving, right? And this is the time, definitely. Somebody just asked another question here. Is this the right time that we should invest in stocks long term? See, long term perspective, of course, earnings also help you realize that if the company has good growth, in like Netflix, if the subscriber growth has become strong, they have beaten up the earning estimates, they have beaten up the revenue estimates, which is good. So yeah, maybe if you're looking for a long-term investment, you are looking at the financial results and it looks strong. So possibly yes. Of course, you would also look at another financial metrics, but then the earnings report kind of clears it all, that at least for the next 3 months, there's a possibility that the stocks are going to look better, right? Another question here: for Indian stocks, we use Screener in to check financial data for Indian stocks. We use Screener in to check financial data for US stocks. Any website we can check. Uh, so uh, the US stocks financial statements are available anywhere you want, because these are public, basically companies that are listed in the stock markets. So anytime you search Tesla financials, it would appear right here. Exactly. And by the way, with Century as investment consultants, we do a lot of research. At any point of time, if you want any research from our side as well on the stock, we can do it. But if you want to check the financial data for any company in US, it is as simple. Just write, let's say Tesla, for example. So Tesla financial statements for 2024, and it will show you the company financials right away. This is not something which they like to hide it. So this is something which is already visible. Also, if you're using our platform, it's available on the platform as well. basically on there are a lot of stock screeners which now are inbuilt on a lot of investment platforms. So also that is something which you can also look at it. um, Here I would like to also show you real quick, some stock screeners which you can see from within the platform also, not exactly. So right here, for example, real quick, guys, this is news and analysis. Um, I think so. Here, I'll just zoom out a bit so everybody can see this. So I'm just taking time here. This is. Yeah. So there is actually inbuilt screener over here also, but this is mostly for a technical trade. But here the screeners are mentioned as per the price and volumes, or the ratings or the market capitalization. But you can find a lot of advanced screeners as well, which are available. As I said, that this is something which is now a lot of times inbuilt in the platforms. But most importantly, if you're looking for the financial statements, they're available everywhere. Especially for US stocks, the financial statements are available. There are a lot of websites you can check, but even if you Google it, you will find it very easily. In fact, as I said, Century as investment consultants, we are always creating price action analysis on all these companies. So we are definitely checking a lot of other key financial matrices also. So if you like to have a chat for that as well, we are definitely there to support you with a lot of research for these stocks as well. Uh, Perfect. Can we get a copy of the price action analysis flyer, which is going to happen tomorrow? So I think it's already in the process. So whichever earnings, tomorrow is 26th. So this flyer works what we have. On 27th, after Saturday, Sunday, I think the earnings, which will start from Monday. So we'll have the price action analysis flyer for that. And definitely the three important things which you need to see: EPS, revenue, and the future outlook. In the price action analysis, it will really help you to understand the volatility of a stock, that how much it is capable of moving after the earnings announcement, and what is the probability that the company will beat the earning estimates. And that really helps you to take an informed investment decision if you're trying to trade the stock before the earnings. Right. And once again, as I said, please diversify, please put your stop losses, do not take high leverage, because this volatility can be mad, right? And you just saw that how much Netflix actually moved. So a lot of companies are going to come up with the earnings. I wish you good luck. And as I said, please, before applying the flyer, this is just for information purposes. This is not a recommendation of trade. Please talk to us, talk to our risk experts, talk to your investment consultants, and only then proceed forward with any kind of investment decision. Right? So thank you so much, guys. Once again, extremely sorry for the delay. This will not happen again. And I think there's one more question before I leave. Data for India. Um, Sorry, if you can elaborate the question, please. Data for India, as in, if you can elaborate this, I can try to answer this. Are you talking about the earnings data, where for the Indian companies, or like how? Because the company earnings calendar for Indian stocks, again, it's going on. If you go to the earnings calendar for any website, Money Control or whichever you're following, like today, for example, Adani Power is going to come up with the earnings. There is Hindustan Petroleum in the press also. All of these companies, they're going to come up with the earnings, and you can always check that how much earnings and revenue they have created, and you can see the impact of the earnings on those stocks as well. See, these are basically financial results, right? So definitely everybody would want to see. the financial results and the financial health of that particular company, right? So you can check any earnings calendar and it will be available. Even today also, the Indian companies have also come up with a lot of earnings, and it's going to happen for the next 1 or 2 weeks as well. The price action analysis for Indian stocks. Okay. See, so currently, because we are not providing Indian stocks to be traded on the platform, no broker is able to do that. um, we are providing US, UK, European stocks, so a price action analysis can be formed on that. For Indian stocks price action analysis, so for clients, what we do is, if they really pick a stock and they want our research, we do that. So if you would want a price action analysis on 1 or 2 stocks, we can do that. Like we did on a whole lot bunch of stocks, we can do it for Indian stocks as well. Given if a client asks for it, we definitely do that. Why we haven't prepared it already? Because clients who want to invest in Indian stocks are already doing from India. There are a lot of discount brokers. Basically, a lot of investors, they are more comfortable trading Indian stocks with Indian platforms. So that's why we haven't prepared. But that being said, if it is needed for the clients, we can definitely prepare something and send you if that helps. Right. So I think perfect. Great session, guys. Thank you so much for all the questions, and I hope that I've answered every question. If you need more details or anything, please, I'm available for a one-on-one session, and these sessions are free of cost. You can come to our office, have a discussion with us, and we will be more than happy to discuss each and every strategy with you. This was just one for the earnings. We do a lot of sessions on Outlook 2024, what is expected, what is anticipated in the next quarter, which are the asset classes you should look in, what are the strategies you can look in. And there are a lot of markets which you can see in 2024. For example, Japanese market for once is doing really well. So we are preparing a lot of these strategies, and I would really love to spend more time and talk more about those strategies. So next week, there will be a different session on a different topic, and we do this every week. We try to do this every week around the same time and different topics, but we try to use different strategies. We try to speak with people and try to answer their questions as well. So till then, you have a great night. My name is Yogesh, and thank you so much for attending this session. We'll see you next week with a different topic. Till then, please be safe, look at the earnings, and also, as I said, manage your risk well. Don't take too much leverage. Always put a stop loss and diversify your portfolio.